What interested you in joining the sort of FinTech space in the early days?
Well, as you can tell by my appearance, I've been at this for a long time. The owner of this company, he and I go back 25, 30 years, and we've always been in sort of financial services. I'll only go back to about 2008, and he owned an ATM company. He had ATMs all across the country. And in about 2008, when the chip technology was introduced, a lot of our clients didn't have the $5,000 or $10,000 it cost to upgrade all of their ATMs. And so Steve, who owns the company, owned the ATM company and still owns company capital, had an idea about advancing our ATM clients enough money so that they could upgrade their ATMs to chip technology. So that was about $5,000 per machine. Some places had, half a dozen machines. So in order to be repaid, I'm sure if you know, but an ATM, the service fee on there is $2. Typically, $1 goes to the ATM company and $1 goes to the merchant. So we advanced quite a few merchants the cost of upgrading to PIN, but we took the full service fee. It was a loan, basically. So we were getting repaid like $1 at a time. But back in the day, 2008, ATM transactions were in the thousands per month. Nowadays, they're only a couple hundred. Back in the day, so we were advancing money to buy chip technology, and the merchant could pay us on every single transaction. So it would take them 6 to 12 months to repay us the advance plus a fee. And so we thought, well, that's kind of interesting. That's, makes a bit of sense. And so started doing a little bit of research and found out that there was a similar concept going on down in the States, advancing money against future credit card receivables. So Steve sold the ATM company in 2009, 2010, and started Company Capital. Because we saw what was happening with our ATM clients going, yeah, that's a hell of an idea. Give me my money early, and I'll repay you over time, relatively short period of time, 6, 12 months, like I said. And so we started Company Capital. In the early days, in 2010, I think we started. In the early days, we were just doing MCAs, merchant cash advance, which is basically advancing money against future receivables. So they were primarily retailers, of course, because a lot of B2B didn't take debit and credit. So that's kind of how we started. It kind of stumbled upon it. Steve was selling the ATM business anyways, but we saw the opportunity in lending money. So that's sort of the start of Company Capital. And we went at it for 3 to 4 years. We were probably only the third company in Canada. Thinking Capital, who used to be called Advanced, I believe, they were the first in, and then Merchant Growth over in Vancouver started in 2009, and we started in 2010. And then On Deck came up to Canada in 2015, and so we switched from just doing merchant advances to doing full-on term loans in 2015. So we've been at it a long time. We've been at it 10 years, and in this industry, that's almost a generation.
Yeah.
We've been at it longer than most. We're by no means the biggest company. We're relatively small, and that was strategic. We decided we wanted to keep it small, and it's paid dividends for us. There's a few companies that have been around for 10 years that really wanted to dominate the market. So they sacrificed profitability for market share. And there's a couple companies that still haven't turned a profit in 10 years. That's not a strategy that Steve or myself really believed in. We didn't want to be the biggest. We're all pretty old, so we didn't want to be at this for 20 years, but we wanted to have a good, well-run small company and make it profitable.